Hello, I am Kunal from EPK Capital. Over the past 20 years, I have had conversations sitting in front of hundreds of successful business owners and leaders, technical entrepreneurs and corporate leaders, people with a net worth of $1 million, $5 million, even $50 million. When I ask, who is currently managing your portfolio? Do you know what the most common answer is? It's not a bank. This is not a hedge fund. The answer is, oh, my father takes care of it, or my younger brother takes care of the investments. I understand. In our culture, money is very personal. It's about trust. And who do you trust more than your own blood? It feels safe. It feels loyal. But today, I need to have a very honest conversation. This informal family arrangement could be the biggest risk to your financial future. Today, we are discussing why combining family dynamics with professional wealth management is a recipe for disaster. Let's start with the basics. Honesty is not a strategy. I am sure they have your best interests in mind, but global markets are complex. Your father may be excellent at saving money. Perhaps he built wealth in the 80s using fixed deposits and physical real estate. It was a game plan back then. But today, global markets are complex. Are they hedging your currency risk between rupees and dollars? Do they understand the difference between EIFs and mutual funds? Are they rebalancing based on global macroeconomics, or are they just buying what they have heard in the news? Most family members manage money based on emotion and tradition, not on data. You are not just losing money, you are also losing time. I often see portfolios that are heavily weighted in real estate and gold. Meanwhile, you are missing out on the immense accumulated power of global equities. For an HNI, opportunity cost is the most expensive tax you will ever pay. We consider wealth management like a business. If a manager does not perform well for 2 years, we dismiss them. It is very clear. But can you take out your father? Can you take out your uncle? Imagine the market drops by 20% because a stop loss was missed. Dinner on Sunday night is going to be very strange. We call it the yes man syndrome. The destruction of wealth often happens quietly. Now, NRIs who are watching, please listen carefully. Often, you leave your property in India with a relative for convenience. Dad, just sign the papers. But the regulatory landscape has changed. Do they know about FEMA or how taxes are imposed on PFIC by the IRS? Ignorance is no defense. When the tax notice comes, it will be in your name. I have seen that penalties erase the increase in years because an uncle used the wrong bank account. Then there is the bus factor. What happens if the sole family manager becomes ill or passes away? Usually, the system is entirely in their mind. Professional property management creates a structure, a legal framework that ensures that your property transcends the existence of the individual. So, what is the solution? You move from family managed to family governed. They sit on the board but execute professionally. At EPK Capital, we act as the CEO of your money while you remain the chairman. We bring institutional discipline to your capital. Let's audit the risk. Check the link in the details to schedule a private search call. Let's ensure that your asset lasts for generations. I am Kunal from EPK Capital. Thank you for watching. Disclaimer: this is for educational purposes only and is not financial advice.